Welcome to my channel, Learn and Earn, to live your life on your own terms. Hello everyone, you're welcome to my channel, Learn and Earn Academy. And today in this video, we are going to talk about Masala Bonds. Now, this name is quite fascinating, and you must be wondering, how can Masala become bonds? And what is Masala Bond actually? So in this video, we are going to learn all that. Now, the bonds are directly pegged to the Indian currency, so investors will directly take currency risk or exchange rate risk. If the value of Indian currency falls, the foreign investor will have to bear the losses, not the issuer, which is an Indian entity or a corporate. Now, I'm sure we all must be knowing what is a bond. A bond is a type of investment which you do uh, to get some sort of return after some period of time. So, Masala bond is like any other bond, but the bonds are directly pegged to the Indian currency. So, investors will have to take the currency risk or exchange rate risk, and if the currency of or the Indian currency falls, the foreign investor will have to bear the losses. So, it is basically aligned to the Indian rupee. Now, the government has also withhold tax on masala bonds in series to contain the fall in rupee. The Indian currency has fallen over a period of time up to 13%, and the investors have remained concerned over the sustained foreign capital outflows and widening current account deficit in the wake of soaring crude oil prices. Now, current account deficit, you must be wondering what is current account deficit? If the export is more than import, we have to pay more money and this becomes deficit. So I hope current account deficit concept is clear. So if Indian currency falls, we have to pay more money to the import. Whatever comes in Indian boundary from foreign nations, we have to pay back to the nation in their own currency. And that is where the problem starts when the rupee depreciates. So, masala bonds are rupee denominated borrowings issued by Indian entities in overseas markets. So, these bonds are issued by Indian entities in overseas markets. Masala means spices, and then the term was used by International Finance Corporation to popularize the culture and cuisine of India on foreign platform. So the objective of Masala Bond is to fund infrastructure projects in India, fuel internal growth via borrowing and internationalize the Indian currency. So I hope this concept is absolutely clear. Now you must be wondering how come Masala bonds help the rupee in its strengthening. How does Masala bond make Indian rupee strong? Now the bonds are directly pegged to the Indian currency. So the investor will directly take the currency risk or exchange rate risk. So if the value of Indian currency falls, the foreign investor will have to bear the losses, not the issuer, which is an Indian entity or a corporate. So the person who is investing in masala bond will have to bear the loss if the value of Indian currency falls. Now, if foreign investors eagerly invest in masala bond or bring money into India, this would help in supporting the rupee. But the question is, why would anyone invest in a bond uh, knowing that the currency will depreciate and they will have to make loss? This is why strengthening of Indian currency comes into picture. Now, the issuer of these bonds is shielded against the risk of currency fluctuation, typically associated with borrowing in foreign currency. Besides helping in diversifying funding sources, the cost of borrowing via Masala bond could also turn out to be lower than domestic market. Currently, these bonds are listed on London Stock Exchange. So these bonds are listed on London Stock Exchange, and anyone who wants to invest has to consider the currency fluctuations. Okay. Now, what are RBI norms for Masala bond? How does RBI take Masala bonds into picture? Now, the Reserve Bank of India allowed issuance of these bonds by Indian corporates as part of its monthly policy statement in 2015. Masala bond should have minimum maturity of 5 years, and there is a 750 million per year limit for borrowers, which can be exceeded with the RBI approval. So let us see who all can invest in Masala bonds. Now, foreign investors who want to take exposure to Indian assets and are constrained from doing it directly in the Indian market or prefer to do so from their offshore location can invest in Masala bonds. So there are many people who want to invest in India or Indian asset, and they cannot do it directly in the Indian market because they cannot come to India and do the investment. However, they can do it from their own country through offshore locations, and this is how they can invest in Masala bonds. HDFC, NTPC, and India Bulls Housing are among Indian corporates which have raised funds via this option. The subscriber of these bonds can sell rupee bonds to a third party, but the proceeds from the issue can't be used for real estate activities or capital market investment. Now, this is something which is of importance. So, any person who is investing in these bonds can sell this bond to a third party, but it cannot be used for real estate activities or capital market investment. However, the proceeds from these bonds can be utilized for development of integrated township, affordable housing project, or any other infrastructure development project. So the first thing that should come to your mind when you hear the word masala bond is the purpose. The purpose is to fund infrastructure projects, not any other projects. So I hope this concept is clear. Now, how masala bonds came into existence? Now, the concept of masala bond was introduced nearly 5 years ago by the government. An international finance corporation stemmed the record fall in rupee to capital flight spurred by severe current account deficit and the tapering of quantitative easing by US Federal Reserve. On June 2013 27th, RBI said current account deficit stood at a record 4.8% of the GDP. The trade data fell the markets on the same day, with the Sensex falling 590 points and the rupee breached 66 level against the dollar and 10-year government bonds climbing to 8.5. Now the record crash of rupee brought heavy dollar demand from oil importers. It brought the UPA government into action. The government, in consultation with International Finance Corporation, decided to launch a rupee denominated bond in international markets. Now, International Finance Corporation launched the first offshore bond program of 1 billion in October 2013. From 2013 to 14, IFC issued 7 tranches of offshore rupee denominated bonds settled in US dollars and pegged to the rupee foreign exchange for maturities ranging from 3 to 7 years. And later these bonds were referred to as masala bonds. So I'm sure this video would have given you a brief idea of these bonds and why these bonds are known as masala bonds. So if you like this video, you can press the like button, subscribe to our channel and share it on social media. Thank you.